Hey guys, DJ from PTA. Today being July 27th, 2022. Pretty solid day. I played a stock SIGA, so I've been playing pretty much the whole week. Um, Played it off major support. I still had shares carried over from the day before on the 26th. You know, the 26th was a choppy day. I kept some shares. It stayed above a key area, so I decided to hold those shares. And then what a lot of traders didn't know, and this is a little bit more advanced. Some are more advanced audio and videos that we do for our private clients and wanted to learn how to trade and trading off of key areas, bounces, or so on and so forth. So we're gonna go over SIGA trades, which was my winner today. We're a really good winner. Also, PGY and the SPY. PGY was a really good run. Started off real choppy in the morning, but it ended up being a pretty solid trade. So SPY is doing something that's very interesting to me. We had a big monstrous day. Ideally, the SPY is doing exactly what it did the last time the Fed numbers came out. So we had Fed minutes at 2:30 today, and the market reacted almost simultaneously the same way it did before. If that is the case, then what we're going to do is probably have a big sell-off over the next couple of days, because we had a big rally on the day the Fed numbers came out, and then it just couldn't hold, and then it just flushed. So I'm really curious to see which way this is going to take. Um, a lot of companies missed their marks, missed their numbers as far as earnings week. So I look at the SPY just to get a kind of overall sense of what's going down. But the particular strategy, you can play on any market that you want. But ultimately, we play it in the caps. We play it on the stocks that's moving, that's got the most attention. So right now, the mark on the SPY is 448. So, it did get over a previous week high. And, it's sitting there as we speak right now. So first trade I'm gonna go over is the one I did not play, which is PGY. PGY has been in a nice little run over the last couple of days. Which really sucks is I didn't take any advantage of the majority of the move. I did play it before and made a little money off of it, but didn't take the real meat of the move. Now, some of my top traders in the room, Trader King, a few other guys, Nino, and a few other kids out there that trades, really took advantage of this full move. For me, I just didn't see it, had my eyes on other trades, and end up keeping my eye off of this one. So to go over it, yesterday was a really good move, which I went over in a previous video. I want to break that down so you guys can understand sort of what to look at. Because at this point, when you're reaching out over previous highs and you're making new 52-week highs, then you're really looking at intraday areas of support and resistance. So let's shoot back to the 30-minute. Yesterday was the big rally. Remember that basically it pulled off previous week high. Previous week high, it broke out, went to 2162, pulled back, and then first thing in the morning we had a massive amount of shares coming in. We had a couple hawks, if I remember correctly, which put it on my radar, but it ran up very quickly and then slammed and halted. So it halted going up and then it halted going down, and then it actually rebound and continued on. Now, looking at the trade, I probably would have played it off of a key area off the 5. Now, looking at the key areas, you had your pre-market high, previous day high, previous day close. So this right here would have been the first mark once it's set as low, because it's already set as high. So $18.15 or $18 area is probably where I would have been at. 18, and then we had a break somewhere right here off the 1791. Remember, all this is going to be entry day, so it's going to be marked purple. So this will probably be my pickup zone to look at. Now, if we go over to our left to read the chart, you can see that this is the same area that it broke down from. So it's massive amount of volume in this area. You see it consolidated in this area and then took off. So from there, when it gathered and recaptured, it went back up, bounced. So this probably would have been the key area here. And it would have been a steep key area, but about right there is about where it went and then ripped. So your risk would have been pretty tight. You would have had to be patient with this trade just because of the price action. So when it slammed, popped back up and pulled, I probably would have entered somewhere right here. Somewhere right here, risking off the low, 1852. So I probably would have got in somewhere right here in the 80s and 90s, probably right there at $19. This would have been about a 30-40 cent risk. And just because I had this double confirmation here, would have took the trade. I mean, it ripped from 18, it's basically called it 19 to 20. So I definitely would have probably took something off here. And then when it slammed, I would have my orders probably about right here. So risk would have been here. So it would have wicked, came back, and then actually pulled. Now, one of the traders I talked to say he had an entry in at 2001. So at 2001, that probably would have been more like right here, which was a decent trade. Because now at that time you see that it's actually forming a wedge right there. So that would have been your wedge. And then 2001, it ripped to 21, pulled back, and then continue on to 24. Not a bad trade. It's still in play because it never really broke down or anything like that. Net change was about 31%. So it looks like a solid trade all the way around if you're still holding shares. But this, depending on a really wacky price action that I see in this was definitely an interesting trade. So you definitely would have had to been patient, nail it. You would have had to been there and wait for that good confirmation. Now the trade I did take was SIGA. Let's go back to the daily on that one. Let's see something here. SIGA. See, my typing this isn't right today. But anyway, so SIGA, again, another one that is trading into new territory. So most of your trades or trade action is going to be based off of key areas throughout the day. So here on the 30-minute is where it got kind of interesting. So the day before, when I looked at this chart, the key area was 1650s. I want you to pay attention to this. So when you look at this trade, you see that it actually took off from 1650s area. Looking at this key point, but now zeroing down to the 5 minutes where it looks a little different. As you can see, they protected it right here at 1650 the previous day. Now if you go all the way back, you can see that this is the area that it literally hit, pulled back, consolidated in this area, and then ripped and pulled away. Now this 1650 is the same area I was risking off of the day before. Now I had orders in at 1671 from the previous day, as I discussed on the previous video. Those that was a key area of where I wanted to get in at. So I still had a handful of shares Not nothing super significant that I would have felt uncomfortable risking 40, 50 cents on, even a dollar. So what I end up doing is I seen a potential bounce play. The reason I saw it is just because the amount of massive volume that came in the morning that ripped it higher above pre-market high. I'm sorry, previous day close, and I was looking for the break over previous day high. So when I saw this particular pattern, and this is a short pattern where the stock goes, slams, and then everyone's looking for the break. So when I saw that the break didn't hold is when I got interested. So remember, I got orders at 1671. So let me draw that line for you. And like I said, this is a more of advanced strategy as far as in the play. 1671. So remember that I'm watching this fall against me, but I'm still up. It's a running tally from the day before because I'd already took profit from the day before, and I still held shares. I'm sorry, that order was actually 17 something. Give me 1 second. So I gotta actually pull up the order book for you guys so I can actually tell you exactly what the price was. 1712. So that's where my order was there. So when the stock pulled up and actually gathered itself here, it slammed down into the 1650. Now what I started to do is when it slammed down, I started loading in here. Okay. Now the reason I did that is because I looked at what the stock was doing in this area. Now the lowest point in this area was about 1641. Is where the buying pressure ideally started to step in. The selling pressure pretty much stopped at 1642. So, and that's on a again on a 5-minute. So when I seen this wick down to 1620, the next area of interest would have been previous week high, which is 1580. So we're already at 1620. 1580. Now, if you take a look at this, let's just put it right there on there and make this entry day. If you take a look at this closely, this is how you play the lines. If you really want to see this, this is how you play it. As you can see, this is the same area that it rejected from, and then finally broke through. So you got 1, 2, 3, 4. Pull, rip, come back to retest. So when you're looking at key areas, you may have multiple areas or a zone. So for those who were looking at it as a zone, the zone would have been from 1650 to 1620. So let's draw that out. And this is a perfect example of a supply zone. I'm sorry, it's demand zone. Right there. So it rejected, making this a demand supply zone. Came back, respected this area, which created to be a supply zone. It then reached away from the supply zone, supply area, and then it went back to continue the trade. So when it pulled back into the zone, that's when I got interested. So you had a nice move from here to here, $2, $2.78. Nice move back down to the same area, 284, and then you had your nice bounce back up $1.95. So this overall trend is sort of like this now. So you can see how the trend breaks and hits certain areas and so on and so forth. Now you can see this as, okay, this may be a continuation just off of this bounce. And it can possibly bounce and go this way, knocking out previous day, pre-market high and break out. That will be the ideal long-term trade. Holding it, it looks probably a little bit cleaner on the 30 minute, so on and so forth. You can actually see the wedge, you can see it tightening right here. But anyway, when we go back to the 5 minute and take a look at this, now you're starting to see how this was played. Now all the traders are getting in here in the supply zone. The demand zone. So as it moves from the demand zone looking for more supply, it's going to go up, wiggle, do what it's supposed to do, and then continue on until it hits a premium area that it would look like it would be somewhat of a supply zone. So I was looking at it for the bounce. Now let's break this down to a 1 minute so I can tell you or explain to you the areas. So because we had this major rejection, what used to be supply now confirmed as demand, it took off. I was in at 1712. So at 1712, when it dropped, most people would have panicked right here. When it hit red to green and slammed really hard, that slam is what created the move. So from here down, it fell. As it started to do this and consolidate, I started to size into this area. So then when it went up and broke down, I looked at it based on count. And now this is another strategy in reference to when it actually closed. So if you look back, you can see that at 10:03 it hit the low, 10:04. So 10:04 low was 1621, and it was 1620 with a reversal. So it hit the low, reverse, meaning someone stepped in and started buying. When I saw that, I added shares here. Then when it bounced, if it had a bounce, I added shares here with immediate out here, which pushed my average down to 1650. So because I had shares here from the day before, I added shares here, waited for the reversal, second candle, added shares here. It put my average at 1650. So I'm still in the red, but I'm in the red a lot now, simply because I dumped to pull my average down to the ideal place. So this strategy allowed me to have a 1650 average with a risk to 1620, 30 cents, and I had a significant amount of shares. Still respecting the 1% rule on your account, but significant enough that, I had to have a tight 20 cent, 30 cent stop. Couldn't do any more. If it had hit 1620 or 1619, I would have been completely out. Now, with that being said, the stock continued and hit here. So now I'm in the green, it wicked out, and then it continued on, slowly grinding. As it gets back to my price of 1712, when it hit 1712, I started taking a few shares off. That left my average down here at 1632. I'm sorry, 1636. So it was 1632 actually. Just check the averages. So it's 1632. We're gonna put that as green, and then remove this one. So once I got my average down here, which is where I'm at right now, I'm still holding some shares, but you see as it did, it continue on. Took off some shares here, took off a few more shares here, and just kind of held the rest. So it ended up playing out to be pretty good, and I'm still holding. And I'm currently sitting at 1632. Now, the overall play will be great to see it again, guys, break and then continue on back up to the 1938 area. Then that's probably when I'll start back at it. If it stays above this supply zone, demand zone, then I will continue to allow it to move into the next supply zone. I predict the next supply zone will probably be between 1938. It's probably this area right here. It's probably somewhere here. I'd like to see it come back up here, gather, and maybe even use this area. And let me take this back to the 30-minute. Yeah, I would like to see it use this area as a demand zone, or come back to it to continue up. So maybe even if it hits here or this area and then pull out. Let's see something here. Somewhere here, the next day, let it hit this area and then pull back up, or even hit this area and then pull back down, gather, and continue on. That'll be a great move. And then I can start sizing into the trade again on an uptrend and add more shares to the position. So again, guys, this is more of a long-term swing. We teach this in some of our advanced classes because you have to know where you're getting in and getting out. You have to know where these supply zones and demand zones are to be able to make the trade work in your favor. So this being a really good trade was really that type of strategy. It was more of a demand zone bounce type of trend that allowed this to move the way it needed to. So this is a nice hold. I am holding shares overnight. So we'll see how this plays out tomorrow on SIGA. But again, guys, this is more of those type of trades. When you are part of our program, we are going to be doing a video tutorial on a lot of our different strategies we use in-house and how we trade to help those who decide they want to take their trading to the next level. They'll have the access and information to do so. Okay, again, guys, thanks for watching. If you have any comments or questions, leave them in the comment section for me. Our team will be able to reach out to you and help you out. And guys, make sure you hit that like button, hit the subscribe button, turn on your notifications so you don't miss any of these videos. I'm trying to keep these videos up and current and the current market conditions so you can kind of follow along as you do it. So again, guys, as I tell all traders, old and new, stay studying and stay focused.